This is Maestro Minute, the show that discusses all things real estate, sharing interviews with the most successful people in the industry. Hear from their perspective and what they are doing to achieve success. Get exclusive tips on how you can also succeed in real estate. Maestro Minute is brought to you by Maestro Development. Here's your host, Nareg Muradian.
You started off in the legal side.
Yeah.
And what triggered you to get into to switch and jump into real estate?
You know, even before law school, I was really into real estate. I didn't own, but my grandfather owned real estate. He owned a lot of single tenant, triple net lease properties, Rite Aids, Payless Shoe Source, those types of stores. And, I always was interested in that. Uh-huh. And then when I went to law school, the real estate class was probably my favorite class.
Okay.
So after I got out of law school and I was practicing law, sometime in I think it was in the early to mid 90s, I got that broker's license and I started doing loans on the side, just as a side hustle.
How long were you practicing before you started that?
So I started practicing in 91. I'd say maybe around 95.
Okay.
I got the broker's license and I started doing loans.
Sorry, what kind of legal advising were you doing? Was it real estate related?
Some of it was. I worked at a mid-sized firm in downtown LA. We had about 50 attorneys. And at that size, you're a little bit of a jack of all trades. You're doing whatever comes in. When I first got out of law school, when you go to law school, they don't teach you how to practice law. It's very theoretical. You learn case law, statutes. You don't really learn the practice of law until you get out into the field. And so the way I learned, one of my big clients were the Nederlanders, a family that owned and managed a lot of the entertainment venues in Southern California. The Greek Amphitheater, the Pantages Amphitheater, Irvine Amphitheater.
You represented them, that's great. Yeah.
So as a new attorney, I handled all the slip and falls. So we defended all of the venues for accidents, personal injury accidents that would happen at the venues.
Man,
so
at the Greek, there's a lot there.
Oh yeah, and those guys, these kids like to party.
Oh yeah, I think I fell there a couple times.
Right.
So you saw an opportunity to get on the real estate side, on the brokerage?
Yeah. So we had some real estate law that we did, some land use law that we did. And so I got some experience there as well. But eventually with the broker's license, I was able to start doing loans. And I got hooked up with this local real estate investment group. And their main thesis was to buy single family homes and rent them out and sit on them for 10 years. So the basic premise was, back then you could buy a brand new 3-bedroom, 2-bath house for $100,000. And back then you could get non-owner occupied financing over 90% loan to value. So you could buy a brand new 3-bedroom, 2-bath house in Florida or Arizona, in Phoenix or Utah for $10,000 and rent them out and be cash flow break even. So the premise was, if you have $100,000, you can do that 10 times. And if you sit on it for 10 years based off of average market rate appreciation, over the course of those 10 years, your equity of 100,000 in those 10 homes would appreciate to $1 million. So it was a way to convert 100,000 into $1 million.
Wow.
But because the premise required you to buy a lot of properties, I was working with investors who were buying lots of single family homes. So we were doing a lot of volume. So that's how I got started. And along the way, I started buying homes. And that was my entrance into real estate.
And how long did you do that before you went 100% into real estate?
I didn't go 100% in until I'd say about 2010, 2011.
I mean, the economy was pretty strong back then, right?
Yeah. Come back from the Great Recession and things were really starting to get going. So I came back into real estate, and at that point I didn't have the brokerage companies or the escrow company, and I was coming in as an investor. And I did my first syndication where I brought in passive investors. And that was a 72-room hotel that we bought in Austin, Texas. And it was one of those airport hotels where we had shuttles taking people to and from the airport.
Was this through Prosperity? Or this Prosperity was not established by the...
Prosperity didn't exist yet.
Okay.
It was kind of my first foray. And
okay.
at a prior company, which I still have, and it's my partnership in Prosperity called Cornerstone, and it was through Cornerstone.
So your first kind of big real estate investment was a 72-room hotel in Austin, Texas?
Yep.
Wow.
Yeah. And it was a handful. Owning a hotel is like owning an apartment where you have all new tenants every day.
Wow. Right.
So it was a lot of management, very management intensive. We did very well with it. Austin is a great city for hotels because there's always something happening in, you have Austin City Limits,
Right.
South by Southwest. You've got the Circuit of the Americas, Formula One. You've got UT Austin, football. It's the state capital. So there's always stuff going on there. And so because of that, it's a great location for hotels.
As far as investment goes, I know Texas has, advantages and disadvantages.
Yeah.
But you guys focus a lot on that area in the South? Or is
Right now, we don't have anything in Texas. It's a good market, especially certain markets. Like right now, Austin's not a good market. It's too inflated to go in as a new investment, especially for what we're looking for. Dallas-Fort Worth is a good market if you can find something that pencils out. Houston is tough because of the insurance issues, because of climate change.
Thanks for tuning in to the Maestro Minute podcast. Make sure to rate this podcast if you found it helpful, share it with a friend that could use it, and follow us on all major podcast platforms. The Maestro Minute, powered by Maestro Development.